My name is Kim Körber. I'm Managing Director and founder of Better One. We are a consultancy in the new work area, and I will be your host of the day. And I have the honor to host the next panel discussion about innovation and disruption of the financial industry. Where are we standing and where are we heading? And I like to welcome on stage my experts for that little panel. He is the Chief Marketing Officer at PayKey, and give him a big applause, Guy Talmi. Yeah, it's a long road, I know. No, Joe, don't hurry up. We have all the time with us. Hi, Guy.
Hi.
You can have a sit here, there, wherever you want to.
Okay.
Next one on stage, another startup. He's CEO and co-founder of iwoca. Please give an applause for Christoph Rieche. You were the one torturing Mr. Mersch. I saw that.
Or you can torture me.
Hi there.
Hi.
It's an honor to have him here. He's industry leader banking and FinTech at Google Germany, and his name is Thomas Grosse.
Thank you very much.
Yeah, Thomas and I had a discussion before, and it was good. I'm really interested in what you're saying next. Hi, Thomas. Last but not least, he is Division President Germany and Switzerland at Mastercard and will hold the introduction keynote for this panel. Please welcome, together with me, Peter Bakenecker. Grün nach vorne.
Yeah, okay. Hello, everybody. So, thank you for having me here today. Let me start with first observation. When you did 5 years ago a speech about payments, usually the room was only full when there was bad weather outside, so it looks like something has improved here. I'm very happy to be here with you. I will talk a little bit about how we see the world going forward in the industry we are in, and to do that, let's start a little bit with the past. So when we founded, or when Mastercard came into business 40, 50 years ago and started with electronic payments, actually, this is how you could do electronic payments. You needed electricity, you needed a physical POS, and in those days, the business model we all had is there were acquirers giving terminals to the merchants, there were issuers giving banks to their customers, and there were us and the likes of us being this scheme in the middle. All of this has changed because, I mean, these were the good old days, correct? If you were a bank, you had a corporate relationship, you gave them the terminals, and what happened is that you co-funded all of that business with your wholesale banking, your cash management activities in the back. So then something happened, that somebody invented the internet, and the internet became more and more popular, more and more people were connected to a new channel of commerce. And what happened in the industry we worked in so far is that new player started to proliferate in the market. PSPs brought payments into the internet. There were new companies that actually did parts of the value chain like risk management, fraud management, and all the industry became a little bit patchworky, correct? Nevertheless, what it did to us is it created a new channel, and what we did as an industry in the old days is we developed something called multi-channel strategy. And multi-channel strategy, the only reason you have a multi-channel strategy, in my opinion, is because those days we didn't have any product that worked in all channels. And this is actually what is one of the key challenges today. So what happened then is with the advent of mobile technologies, and this is, by the way, the penetration of smart mobile phones in the world, lots of things have changed, correct? And what mainly has changed is the customer experience in commerce and what we call the convergence between the physical world and the digital world, okay? So these things are more and more interlinked. More and more people are capable of being actually included into global trade, into global offers, into multi-channel commerce. And all of these things together finally changed the model we do business in, and these are the three drivers behind it. I'm sure all of you have talked a lot about regulation and competition. So in the industry we are in, with MIF regulations, so interchange regulation, the economics of this industry changed significantly with PSD2 in front of our doorsteps. Actually, access to account, the way we bank, the way people can use the existing infrastructure will change dramatically, GDPR and many others. Technology, of course, we know that, is a constantly changing factor, but what is key in all of that is the customer expectations in all of these, in these changing environments. I think we all know 10, 12 years ago, when most of us most probably ordered the first book at Amazon, it was completely thrilling, correct? I mean, there was a complete new channel. You ordered your first book. In those days, it was okay that you went to your shelf, got your leather wallet out there, typed in a 16-digit pen and a CVV2 and all of that, and magically, 3 days later, the book appeared in your house, in front of your house, correct? Today, that's a little different because you listen to music, you do WhatsApp here, some ironing here, and you order a book and you authorize that with your fingerprint. Okay? There's a study actually that today consumers expect a transaction to be finished from initialization to confirmation in 3 seconds. I think 10, 12 years ago, that was very different for all of us. And these 3 trends did something, or will do something, what has started in other industries a while ago. And let me tell you a story about this gentleman. If you don't know who that is, that's Rob. Rob is a Canadian CEO of a gold mine. And what Rob did 2000 was he was running a gold mine in the area of Vancouver. And if any one of you has ever been in the gold business, when you are in the gold business, you do 2 things. The first thing is called probing. The next thing is called exploring. So what you do, remember from the cowboy movies 400 years ago, you run around and you try to find gold nuggets. And when you find gold nuggets, actually, you remember where that is. And what you want to do with it is you want to increase the likelihood that you find lots of gold before you bring in the very expensive drilling equipment and start exploring the area you have. So this has been done, this has been the same for 400 years, okay? This gentleman, as I said, was the CEO of a gold mine next to Vancouver, who was actually very much below the expectations of gold they found. And what they had is they had a lot of highly talented geologists, and they went probing. And he did what everybody would have done. It doesn't matter in which industry you work. There were not enough geologists, not enough data, so what do? You hire more geologists, correct? They had more data, but they didn't find more money. So what he did, 2000, at the beginning of the area of the internet, he had an idea. He said, I will do something very radically different. I will put all my data, what is the IP of the gold industry, correct? The last thing you would share publicly is the intellectual property on the findings you have from your geologists because it's a competitive advantage. What he did is he put all these data onto a platform in the internet, and he announced something called the Gold Corp Challenge, and he gave a prize of $100,000 those days for this company who gives him the best likelihood to find gold based on this data. Okay? 2 weeks later, he had 300 submissions from 30-plus countries, from consultants, from data analytics, from mathematicians, from many, many other disciplines. And then the winner of the challenge was an Australian-based company who did 3D modeling with the data he provided. Okay? And with this data, he found gold worth above $3 billion. He's a very happy man since that day. And what does it tell you? And you know, we all run our companies, or we ran our companies in the past, like you hire talent, you build a wall around it, and then actually you try to nurture this talent. You try to develop intellectual property. You protect it from the competition. So this is how the Gold Corp Challenge looks today, just to give you an idea. So it's an Amazon Web Service. You know, it's connected with many partners that actually contribute data. And we all know what that is, correct? This is open platform or open banking, nothing else. Because he was capable, by giving away his IP, to access very, very different resources, very, very different skill sets, to find a solution for a problem that has been solved differently before. And many people in this room, most probably, work in an environment that is characterized by this. So the left piece was more or less, are there any millennials in the room? I hope so. The left part was more or less the world we grew up in, correct? Payments was provided by your bank. And there were bank core systems, and there were different schemes, there were cards, there were ACH, like in Germany. And actually, customers went to their bank to get a payment product. Okay, the internet came, and then what I said, it became patchworky, and things like PayPal, Ford, Klarna, and all of these players developed, and they disrupted the industry. And everybody was thinking, what do I actually do with it? And with PSD2 and all the other things coming in the future, we will see a more open banking system in the future. We call it unbundled service layer, where actually people on top will use the bits and pieces to take the best stuff out of the industry to develop for the customer expectation a solution that is the best way possible. Okay, and the other thing we talked briefly about is technology. All of you will have heard of all of these technologies, and we as Mastercard, we work with all of them. And I recently read a very interesting line, and that is, people are not bothered by technology that was invented before they are born. Think about it. No one in this room is really bothered by the idea to have a light switch, correct? To switch on electricity. That's completely normal for you. But I guess that everybody in the room changed his or her way to interact with machines when the touchscreen was developed, correct? I mean, I have a 6-year and a 2-year-old son. My 6-year-old son orders stuff with Amazon Echo. It's completely normal for him. And all of these things, I'm sure, in the future will be completely normal for the next generations. And the other thing is, the industry you work in, how capable are you to react on all of these changes? How capable is a large bank with legacy systems in their basement compared to a FinTech that is built on open APIs and all of this? In our days, the ability to react quickly on customer changes and deploy a software based on changing customer need is critical. To give you an idea, this is the time when software is deployed within different companies. So from every 11.6 seconds at Amazon to 100 times a day with Netflix. And if you think it's 1 per 56 days at Barclays, that is wishful thinking. This is the time they need for the paperwork to get something done. Okay? Having said so, finally, the largest driver of change is what we call the consumer behavior and the consumer expectations. And it's not about how the consumer is interacting with something. It's about how processes change where consumers are involved. So there's a guy called Mark Andreessen. He's a famous Silicon Valley investor, member of the board of Facebook. And he once said, in the future, there will be two kinds of people. Those people that tell computers what to do, and those people that are told by computers what to do. Okay? And this is a trend we see in many industries. It started in Wall Street, where traders were replaced with algorithms. It went to internet advertising. I think my colleague from Google is better qualified to talk about it. And then, we all know this. It's a Uber, Airbnb. In the past, you had a process, a human process, where gaps were bridged with technology. So the accountant that did your tax declaration for you used the PC to actually do that. In the future, it will be the other way around. It's a process done by machines, done by technology, where gaps are bridged from human beings. You still need an Uber driver, but let's actually see how long that will last. And with all of that, you see trends developing. I mean, one of them, the obsession to customization, okay? People want to have products that actually fit their needs, that are precisely as they want them to be. And all of that started 100 years ago. It was Ford who said, you can order whatever Ford you wish as long as it is black, okay? And these things have changed, and it's the same in insurances. I mean, FinTechs that work in insurance that actually want to provide customers with dedicated insurances for their skiing break and not a general insurance for 365 days where you don't need it 340. It's fashion, it's furniture, it's all of this. This, for example, is the latest thing. There's an app now, the IKEA Plan app, the Swedish furniture manufacturer that uses the new augmented reality module on the iPhone 8 and iPhone X. And what they actually do with it is live-like experience when you buy furniture. And of course, they don't stop there, okay? Customer experience is the one thing, but what follows is actually virtual commerce. And with virtual commerce, you produce data, you need means of payments. This is something we are in to provide for those kind of solutions the right ways of payment. Another one, and And I recently learned, I thought millennials are the best and greatest. There's actually a new generation existing. They're called centennials, so everybody born after 1905. Not sure anybody here is in the room. But what they don't like so much anymore is sharing everything. Okay, I'll give you an idea. Who in this small survey, who in this room uses an electric toothbrush? Okay, so we don't have a hygiene problem here. And many of you, if you have an Oral-B toothbrush, you will have this little device what you can stick onto your bathroom wall, completely useless, but it smiles at you when you did a proper 2 minutes toothbrushing, and it gives you advice and all of these. So the more sophisticated people might actually have downloaded the app of your Oral-B toothbrush, and now you're asking, where does that guy go with that? So if you have that app, if you use it, Uber uses your data in New York to predetermine where to send taxis. Okay? Because Uber found out that you usually take 12 minutes after you finished your toothbrushing until you order your Uber. Okay? And many, especially younger generations, have a problem with that. Okay? And this is one example. It's the Uber equivalent of Singapore. It's called masking, and we call that dynamic identities. All of us are different here than you are at home when you play with your kids, correct? And all of us want to be different if you are on the internet. And there are more and more apps and providers that actually provide anonymous identities within the internet. So in this case, actually, your driver never gets your real telephone number, and even the token that is provided is deleted afterwards. So what does that mean for us? I work in a payment network, and the first thing I think we have to make sure is that the people understand I don't work in the card business, okay? I work in the technology business, okay? What we do is providing a network. All these trends globally going on there, I personally see as the biggest chance for us, of all of us. I don't see too much of a disruption. What I see is tons of opportunity for collaboration with fintechs, with new players entering my space. For example, when Apple Pay entered the wonderful world of payments, it was a real driver for us. It was a driver for change, a driver of people starting talking about these things. And we have seen that many, many times. So several industries have been disrupted, okay, a while ago. And what you see is, it's the travel industry, the hotel industry, and all of that. And we talk about a shift from a physical to a digital industry when more or less 50% of the volumes an industry has, or the revenue an industry has, have gone from one channel to another. And the key observation here is that actually the time it needs until this happens is decreasing and decreasing. So in my industry, Apple Pay started 2.5 to 3 years ago, and we will see how long it takes until actually globally more and more payments are done via mobile phones or other channels. So finally, we work on mainly two things within Mastercard. And number one is we try to find players, we try to find partners, new solutions that are, without any doubt, focused on the consumer experience in payments/commerce. And number two, as important as number one, is security. Okay? With all of these data coming out of these new channels, with all of these data that are floating out there with the Internet of Things, and every device becomes a commerce device, and personal identifiable data, and so on and so on, security around these things is becoming more and more important, because there's never a 100% secure system, but we try to make it as good as possible. So what's our role in that? As I said, we are not in the cards business, we are in the technology business. Our partners on all sides that connect to a network are those that provide the solutions to consumers, to banks, etc. What we want to do is to provide platforms to co-innovate with the players in the industry. Okay? The basis for this is, of course, our Mastercard Auth Clearing Transaction Network. On top of that, we have something what is called MDES. It's a digital enablement services, also known as tokenization engine, tokenizing everything, making sure that your credentials, that can be a credit card number, that can be your phone number, that can be your email address, whatever you have in your phone, in your Fitbit wristband in your car, whatever you want to pay with in the future, is secured, is tokenized, and can't be used in any other way than it was actually intended to be for, okay? Then wallets, so we have our own wallet, we have partner wallets connected, we have a couple of hundreds of issuer wallets, but it's the same if you want to connect your car, if you want to connect your Fitbit or whatever Garmin device. This is the idea behind it. And again, we are there to actually co-innovate with FinTechs, with our traditional partners, with anybody who has a solution to offer within this industry. We are completely open API based, so we have 60 plus APIs available globally for the industry actually to partner with. So that's the idea, our solutions plus partner solutions plus third-party solutions, and this is actually the great chance for all of us at the end to offer better, more secure solutions for all these wonderful things in the future to consumers. So there's a little German problem, and this is this one, okay? I stole shamelessly from my colleagues at Google. Germans love cash, you know, actually more than cars and beers. What is quite astonishing. So if somebody asks me, who's your competitor? Not the other scheme, okay? It's actually cash, okay? In Germany, 85% of every retail transaction is still done in cash. I recently used my mobile phone. I don't live in Germany, I live in the UK. So I used my mobile phone at an Edeka store in Munich, paid contactless. The guy was shaking the terminal, okay? But he finally let me go after this system told him it's authorized, okay? So we are happy to fight this fight together with all of you because we believe in the future of digital payments that are more secure, more convenient, and actually less costly. And, you know, my vision of the future is for all of us, there will be a push done by technology. And I mean, today we talk machine learning, blockchain, all of that. I'm sure when we meet in 2 years from now, there will be other technologies that we all talk about. All of that done by a kick of the younger generations who have different expectations on product, experience, lifestyle, etc., etc. And finally, the business we were in the last 40, 50 years will dramatically change for all of us. But at the end, I'm sure there will be plenty of opportunity for all of us. Thank you.
Thank you very much. Yeah, thank you very much. That was quite insightful. Boys, we can pack up and go, right? No, I'm just kidding. Okay, thank you very much, Peter. To start with you right from the beginning, then you can have a moment of silence. Okay. You told us a lot about what Mastercard is doing, but what is your day job actually at Mastercard as a division president in Germany and Switzerland?
Good question. So my day job is, of course, you know, developing the business with the partners we have in Europe, and actually deciding on, you know, what's the bet to take, okay? Because everybody talks about everything right now. It feels like everybody wants to play in all of these things, and it's difficult, correct? Because, I mean, most of my partners are banks. Banks have lots of legacy, and you have to actually decide which bet you pick and what do you want to do. And, I mean, we will see that there's actually very good development. Okay. Also, the German banks and the Swiss banks, they digitalize more and more. They understand the value of global solutions that work everywhere and every channel at every time. And they're actually making good investments and a good way forward into these new solutions. You have some German banks that have already mobile payment solutions. And I'm sure in 2018, you will see much, much more.
Perfect. Thank you very much. And what do you see as the biggest trend at the moment in FinTech? I mean, you mentioned platform, you mentioned wallets, you mentioned tokens, all of that.
Compared to a couple of years ago, where everybody was, oh, we are disrupted, and what do we do tomorrow, and do we have a job, and all of these things, I think people understood more and more that together there's the opportunity to build new solutions around that. I mean, one example, when we allowed Apple into our network, okay, and then all the banks say, hey, you know, how can you let Apple in your network? And the answer is easy. If you don't do it, they will find a way around to actually get access to their customer base, correct? And it's a solution that works in collaboration between an Apple, a Samsung, you name it, and with the international card schemes in the background that found a very convenient, very nice way for consumers to use their mobile phone for payments. And So the balance between it actually has changed, and the understanding has changed that also with players like Google, all together we can create solutions that are much better what existed.
Okay. So basically, there's not a specific technology or thing. You're just about this whole platform trend and
platform trend. The specific technology is definitely the tokenization services we and other players offer, because this is the new basis to actually be part of all that. Because nobody wants your real credentials, your real identity in devices, in your watch, in whatever, in your mobile phone. When this is lost, there are security concerns. So the tokenization platform, MDES in our case, is definitely one of the key technologies we are currently marketing.
Cool, thank you. Guy, what about you?
Good morning.
What are you doing what are you doing as a CMO at PayKey, and what's your thing about the biggest trend in FinTech?
Okay, I'll start with a quick introduction to PayKey for those of you who are not familiar with us. We are an early-stage FinTech company from Israel. It was founded in 2014. And what we're doing is, rather than disrupting the banks, we actually work with banks, enabling to provide social payment solution across any messaging platform and social applications. So instead of banks waiting for the customers to go into their facilities, it used to be the branches, then it used to be websites, and now mobile application. But users don't want that anymore. They actually want to conduct financial services and transactions from within the places they spend most of the time. And that place is social network and messaging platforms. And with our technology, bank users can actually initiate and complete a variety of financial services, started from peer-to-peer payment, but moving into other transactions and a variety of information and financial services from within any social network or messaging application. So basically, we kind of broke down the barriers between financial services and social networks, and we did that by developing a keyboard. It's a standard mobile keyboard, which is installed on the user device, but is integrated with the bank's app in the background. And with that, every time we open the keyboard, and users open keyboards on the device maybe 150 or 180 times a day, if the bank has real estate there and can initiate, user can initiate services from there, this is how we close the gap. So this is in a nutshell what we do at PayKey. We are working with banks. We have 7 commercial agreements with banks in Australia, Turkey, Norway, Singapore, and Israel, and expanding rapidly. So this is what we do. I'm the CMO, so basically my day job is to actually drive the business. I'm in charge of strategy, product management, and marketing. So basically put PayKey in the right position. Positioning is a key factor in the success of an early-stage startup, especially in this vibrant ecosystem where there's so many solutions, there's so many fragmentation. So it's really a big challenge to actually put us in the right place, having the right messages, and sending our sales team into the right directions with the right tools.
Okay, cool. And what about the biggest and hottest trend for you right now in the financial industry?
Well, the way I see it, everybody's talking about open banking. I think it's much more than that. I would say it's the total convergence of platforms, and this is where we are today. There are no more, the fragmentation between different platforms is disappearing. People are doing different kind of services and consumptions from the same place. And the winner today, the way I see it, is the messaging platforms. So we can, chat on these platforms. We can do social activities. We can do payments now. We can do commerce, and we can even do chatbots and talk to our banks or to our service providers. So, looking at that development in the market, I think the fight that financial institutions see today is on the engagement, because just providing the right service or the lowest fee for a transaction doesn't do it anymore, because the non-traditional players are actually capturing more and more market share, and financial institutions are seeing these trends coming over them, and this is where they need to fight back.
Okay, so that aligns a little bit with Mastercard saying you think the biggest trend is the customer engagement, and the whole thing about messaging platforms is like the new user interface is no user interface. Can we say that?
Well, I think there is a user interface, but you need to make sure that you are engaged with that user interface. And the way we see it today, messaging platforms are winning. It might change in the future. But yes, I do agree with Mastercard, and I think this is probably one of the reasons Mastercard invested in us as one of our key investors.
Okay, Thank you very much, Guy. So, Christoph, tell me a little bit about you. What are you doing? You had a little pitch with Mr. Murch, but please give the audience an insight.
Thank you for having me today. So we are filling the void that the banks have left in small business lending. It's been a dreadful decade for small businesses. Lending has been contracting for any business that is relatively young or generates less than a million in annual turnover, while the rest of the economy has been booming with credit, regardless whether you look at mortgage markets, corporate loans, or consumer lending. So this customer base has really been left behind, and that despite them representing a very, very chunky part of our economy. What we have developed at iwoca over the last few years, we have financed 15,000 businesses ourselves, and we were able to cut down the time from typically 4 to 8 weeks that a small business or bank needs to turn around a small business customer if they were to lend, to all but 5 minutes. And that is for a new customer that we had never seen before coming to our platform for the first time. So what I see as a trend is that consumers and small businesses, they want instant service in whatever service they want to consume. And what we also know today, it is possible. The last fraction of financial services transactions, whether that's in credit, whether that's in foreign exchange, or whether that's in investing, can be done fully automated without any manual intervention. It is possible. What we don't know yet is where in the future the consumer will want to consume these services. Will it be on a platform like Amazon, or will it be through Facebook, or will it be through their day-to-day contact at a local merchant or at their hairdresser? We don't know where they will consume them, but what we do know is because it's instant and fully automated, it can be offered everywhere, regardless where a customer currently is. So we have never had a situation where you put so much control into the consumer's hand. So what really kind of is on my mind mostly is, what will this mean for small businesses? This is the most forgotten market in financial services, and it's lagging 10 years behind what we've seen in the consumer world. So a lot of my thoughts are going, where will small businesses be able to get financing in the future without even thinking of a bank, or without necessarily even thinking of requiring financing in that instant? And that can be given to you as an example when you're, as a consumer, going to T-Mobile to upgrade or get a new phone. As a consumer, 2/3 will be using a 12 to 24-month contract, and then they will be comparing this contract based on the hardware as well as the data package that they get. Credit is nowhere mentioned in this transaction, and we're far away from this in the small business world, and that's most where our R&D is going into, is to make financing available in a totally seamless way when and where small businesses are looking for it.
Okay, thank you. So basically, the more B2C part, the more B2B SME part, like, again, customer engagement, saving time, the access to the credit market, the access to payments. This is what you see as the biggest trends right now. Cool. Okay, Thomas, you're at Google, and you're the industry leader banking in FinTech. How is your day-to-day work going? What are you doing?
Well, good morning. So my team and I, we are pretty much responsible for our business with banks and larger fintechs. So traditionally, that has been a lot of advertisement marketing products. But since the product portfolio at Google is also evolving quite a bit, it's branching off into different fields, right? Analytics services is a big thing right now, helping banks get actually better analytical capabilities with our tools and services. Mobile payments is a thing we are discussing also with banks in Germany, but also Mastercard is a partner of us in mobile payments. Cloud is relatively big now. We opened a cloud cluster here in Germany, so you can actually use Google Cloud services with data stored in Frankfurt. It was opened up 3 months ago. Another big thing coming up is everything around machine learning using artificial intelligence on big data. So a lot of moving topics, but at the end, I mean, we're trying to help our banks and partners to kind of obviously use our products and services, but also help in the overall digital transformation.
Okay, so that's perfect because you're not actually in the financial sector. What do you see from a little bit from the outside? What's the biggest trend that moves them right now?
A lot of things, I would say. If you would ask me what's probably the biggest opportunity out there, would be machine learning, artificial intelligence overall, I would say, because, I mean, Google transformed itself. I mean, we are a big company now, but we used to be mobile first. That was 2-3 years ago. Since 1 year, our mantra is AI first. So we're seeing each as a AI first company, because we think every company which is working with big data has to get a handle on machine learning and artificial intelligence, because every big data company is going to be disrupted, we think, in the next 5 to 10 years, if they don't have a handle on it.
Okay.
And we use it a lot already in a lot of products, like Google Search. The ranking algorithm is partly based on machine learning. Google Photos, voice recognition is all already enabled, and we see huge potential.
Okay.
Yeah.
Thank you. So for me, it sounds a little bit like the wild days are over. When we started 3 years ago, it was a discussion about who will be disrupted next, the financial industry, the banks, the service providers, who will be down. But at the moment, I have the feeling that there is a consolidation, or that there is more of a common understanding in the market.
I totally disagree. I think the mess is just starting. So to speak, in a language. But if you look at the financial institution, you know, as the industry, the incumbent industry that used to control all the financial transaction, has the trust of the customer, has the relationship with the customer, what you see today is a total disruption of this ecosystem with players which are coming from different areas, such as, you know, large technology vendors, social players, which are eating up a substantial part of this market and winning the customer engagement. So in that respect, there's a big disruption going on, and the way I see it, it has just started.
Okay. Yeah, but okay, it's about the customer right now. So, and the next big thing will then be we talk about the front end right now, right? The customer engagement. But all of you, I address the startups here because I know how it feels like. But you don't have the back end without the global players or without the financial industry players. Is that right? Or do you have a banking license or something? This is what I mean. Like, is there like saying, okay, we shake hands and there's just peace at the moment, or what is the?
Well, I didn't say that it's going to be fragmented, right? It is, especially we're talking about payment, the infrastructure and the correlation and collaboration is key, especially we're looking at global scale. However, the shifts, the role are shifting between the different players, and when I say disruption, I mean the banks are not going to lose. Actually, if you ask customer, the trust is still with the banks. However, the banks and other financial institutions are reluctant to stay what we used to call in the telecom space the dump pipe, just transferring the money. They don't want to lose the customer engagement, and this is where the new players possess a big threat of them.
Okay. Addressing Mastercard, you were telling us about the cooperation with Apple, for instance, and saying they will find their way around. So basically, let your enemies closer than your friends, something like that. What do you think about all of that?
Let me answer it this way. There are two camps. Okay, there are these banks. What we see, they are afraid of being left with the plumbing. Okay, and what they do is they open up. They try to integrate these new services. And I'm partly with you, because there are more clever solutions out there those days for many very traditional businesses, like correspondent banking, like remittances, so money transfer from one currency to another currency. So, I mean, these were industries that were long dominated by a couple of players. And they are now really, really clever, well thought through FinTech or somehow still start-up-y kind of solutions. But, I mean, there are banks that use these new opportunities, integrate these services into their infrastructure, into their offer. And I think they will be the winner. And back to your question, not the ones that will be disrupted. They will be the ones that will evolve. But there are also the others, correct, that build a wall, that still don't see the trend, that want to protect the customer relationship at all expenses. And also, never forget, it's also a question between willingness and capability, correct? Because, I mean, many of these players have very old legacy systems. I mean, GE, for example, GE globally deploys 9,000 different IT systems. Okay, I mean, how do you want to be quick, nimble, agile, and all of that, you know, with this kind of setup? So what do you want to do? What are you capable of doing? And I have never seen a bank where we went in with an idea that would require IT resources that said, yeah, of course, plenty available. That doesn't happen because, I mean, this industry is so heavily regulated and they have to invest so much money into, you know, keeping pace with all of these development. So what can you actually afford to be part of? So what can you do, correct? Not that they don't want to, but it's a question of, you know, willingness and capability.
Yeah. And then coming to Google, we talked about a little bit before the panel. What is the problem with Google just stepping in and saying, okay, we build a bank from scratch because we know how it works and we have the technology, we have the tools, we have the network, we have the customers. Why not doing this?
Well, I think the key answer to that is it's not our DNA. We see each other as a technology company, and at the end, we are partnering with a lot of companies, so we are an ecosystem player. So I don't think it would be the right move for us to go into banking. I don't even know if we would be a good bank, so to speak, because I think maybe we don't have the right capabilities here and there. But coming maybe back to your question earlier, so it depends a little bit how this is going to develop, right? I mean, I think at the beginning, a lot of startups or fintechs, they were really against banks. They tried to, you know, okay, we're going to get all the market share. And when you look at it right now, I don't think the actual client impact hasn't really happened yet, or customer impact. I mean, there are a lot of startups out there, but it kind of moved to collaboration, I think. I mean, a lot of startups are now working together with banks. But this might change again, right? PSD2 is coming next year, so the payment regulation is going to open up payments more. It's much easier for startup to get scale. I mean, with all the options you have, you build your banking engine on the cloud. You're scaling fast. It's mentioned earlier, banks have a lot of legacy systems, and I think the biggest risk for banks is that they are not moving fast enough sometimes. And so I'm working, like I said earlier, with a lot of banks, and my biggest concern is I think there's a lot of potential as well for banks, but they have to move faster because technology is going to change, assistance is going to come. How do you kind of integrate assistive systems in your services? And if you take like several years to kind of get the first adoption, that's just too slow, right? And a startup might be much faster.
Yeah, indeed.
So, I would also disagree to this agreement that the hype is over and nothing happened. I mean, there's been like a 3 to 4 year trend. I mean, who would have seriously expected that the banks start to topple sort of after 3 years? We're talking about a much longer trend that is happening, and we do see elements where there is very large disruption. If a company offers a card and has 1 million customers using that card within 12 months, that is definitely showing that there is consumer demand for a different experience. But I think what people underestimate, financial services are complicated. This is not an e-commerce shop that you're setting up and then you sell 1 million shoes 2 years later. The technology behind this is complicated. You're not building this technology within 12 or 24 months. It has to be tested. It has to get to the seamless and instant transactions that we as fintechs are advocating. And you've seen a lot of things happening over the last few years that went into this direction. And I think the next 5 years will be really interesting to see how fintechs are coming together to provide their services in a more bundled way, which will then be the first time that they're competing as an entity to banks with a generally sort of superior product experience across multiple product groups. But as I said, it's only starting that fintech companies are also integrating themselves in other platforms where users have more engagement with. So I think the much more exciting bit is starting now. And people and bank CEOs who think sort of it was a short-lived hype are living very dangerously, and I think there are very few who have that thought.
Okay, Thank you. Okay, so let's have a look at the German fintech market, just some bits and pieces. As we read in the press, N26 collaborates with Clark with insurance, is spreading all over Europe. Scalable Capital just partnered with ING DiBa and had doubled their funds under management. But there is, like I said before, kind of the feeling that there is a concentration on specific fintechs in the market, like a winner-takes-it-all mentality. That the big race is over, even between fintechs, to be like more disruptive or more innovative, but just take market share and satisfy the customer on a level where they say, oh, it's okay, we're just N26 having their banking license, we're the next digital bank, so now we build up customers, that there's not much more disruptive force in it. What do you think about that?
Well, as I said, sorry, I'm not sure if the question is directed to you, but you've seen Revolut as a very clear example, going for 1 million customers in less than 2 years of existence. So I would say they're going for scale and are investing heavily. Monster raised another 70 million 2 weeks ago. Revolut raised about a similar amount. N26, I think, is raising more money. So I think that trend is very well in force, and it's really not sort of run out of steam. It's rather gaining steam. Okay. But you might not have seen the first banks topple because of a fintech, and I think that sort of perception in the market is exaggerated. That fintechs, are in the end not going to be the force that will drive market change. They do.
Yeah. Okay. How do you see that from Google's side?
Well, I think, I mentioned earlier, I think there's going to be a lot of change still going to happen, but I think one of the reasons why you haven't really seen that much change yet, because, I mean, at the end, banks are lucky, so to speak, that customers are quite sluggish. I mean, if you're a customer of a bank, before you switch your bank, it's not your high priority, top of your mind normally. If the service works, you don't really move your bank. It has to be a really big advantage, and for you to switch. So this is kind of protecting banks right now, but that might change as well. I mean, as was mentioned earlier, the whole customer journey went digital, right? 90% of purchases of banking products are actually driven partly by digital. 30% is already totally digital. 60% a mixture of digital and offline conversion. So this is going to increase. You have mobile increase. So my feeling is brands are getting established. Once a fintech has some type of a brand here in Germany, and then the trust base is there, it might change. There might be, change always happens very slow at the beginning. You overestimate it at the beginning, and you underestimate, and then you have a tipping point where it's kind of really goes off. And so we're just before the tipping point, right? So it would be my take. Okay. How much banks are going to be able to maintain and keep their current position is dependent on how fast they're going to move and adapt themselves. Yeah. I think.
Okay. Yeah. So the trending topic at the moment, customer engagement, the front end, the user. But Thomas, you said AI and machine learning is on the rise, that we hear later in another panel. Is this the next thing to come? Is this the next thing that threatens banks, like saying we can build intelligent systems that replace core banking systems, or speaking of blockchain, the whole KYC process and whatever? What else?
Parts of it. I mean, when you think about, for example, international banking, correspondent banking, I mean, these are use cases, or document archiving and all of these, where blockchain technologies could definitely be used. But there are others like conversational commerce, so chatbots and all of these, that actually people can talk to their bank account. I mean, there are first banks where you can actually start a direct debit with your Amazon Alexa, transfer money from me to Stephen, and then Alexa does that. So we see these things, and I think it's another example after the touch screen how you actually interact with digital media, correct? For my 6-year-old son, it's completely normal to talk to Alexa, whilst my mom says, oh, really? So, I mean, this is a different generational thing, and what fintechs did very well, and I think we have all seen that, is they created a new standard for some solutions. Okay, my favorite example is opening a bank account. Recently, a couple of months ago, I went to a German bank here into a branch, wanted to open a bank account, and the very friendly lady said, "Yeah, can you come back next Thursday?" This is not really how it should work, correct? I mean, it's the N26s of this world, I think, that give you in 7 or 8 minutes a complete, usable current account. And of course, I mean, others are copying these kind of new standards, correct? I mean, video ident and all of these things. And it will always be the fintechs, the smaller, nimble ones that drive these trends. And then it's becoming a question when this becomes the new standard and is actually going into the industry.
Okay.
I would add into the discussion PSD2, which is becoming effective in January. I think that's going to be such an exciting change for all of us here in the room as consumers. I bet most of us don't really understand where all of our money goes every month and whether we actually pay the right price for electricity and our telephone bill and so many other things that we're paying every month. So through PSD2, companies, not just fintechs, but companies will get access to that data, and through much better and more modern data modeling, they will be able to understand these patterns from you and will be able to give you really tangible value add in what you can do based on your financial protection data. And that's very valuable for fintech companies, that's very valuable for banks, but it's a massive, massive gain for all of us as consumers in terms of financial education and making something with it. And that's, I think, what artificial intelligence means. You gain, through the better use of this data, you gain a really sort of value add for us as consumers. And I think that's one of the most exciting trends that is about to happen. And I think that will play to this tipping point, that there will just be companies that will be much better at understanding this value add to us as consumers. And then this sort of word will spread. And then with the spreading of the word, you will create this awareness that there is a better solution than maybe sort of the old boring account management tool that your bank is offering you. And then if banks are not fast enough in catching up with those by either cooperating or building it themselves, then they're really at risk of losing this customer trust that they had in the past because they offered a much better solution somewhere else. So I think that's sort of what we're talking about with artificial intelligence, is real value add that you need to see in the consumer's eyes that this data can deliver to you.
Okay. Talking about trust, I love this topic because actually, for me there are two things for the customer. On the one hand side, it's trust, and on the other hand side, it's efficiency and time saving. And there was a CEO, I don't know which one it was, from a large corporation that says the biggest startups in the future will be that saves the most time for the customer. But on the other hand side, you have the trust thing. So basically, tell me if I'm wrong, the services will be decentralized and are partial over the fintech map, but the trust will centralize on certain players, saying Mastercard, saying Google, Apple, Microsoft. Is that a trend that you see as well, that you see like the centralized trust and the decentralized services, saving time on the other hand and centralizing trust on the other hand?
I mean, I would say consumers follow convenience, correct? And you expect the security in the background. So, it's with the consumer in the future when there is PSD2 and access to account, and there is a provider for all this, and it's a Cypriotic-based kind of company, nobody knows. That's a question how you build this trust, correct? I mean, how do you partner up? With whom do you partner up? With whom do you empower the engines in the background? But it would, especially in Germany, will play a key role. Okay.
Yeah, what we found out, actually we looked at that topic quite significantly. The consumer trust is still with the banks, if you ask them, but you see them moving away because of convenience. And this is where the trick is. People are, based on our experience and based on numerous researches that we have done and other vendors have done in the industry, you see that when you ask the customer, they want to get a service from the bank or financial service from the bank or for the financial institution because this is the trust is, but you see the movement into other players because they provide a better user experience and more contextual and more intuitive. So my assumption based on that consumers are willing to kind of give away a little bit on trust for the user experience. And the trick is, can you combine the best user experience with the trust into one offering? And this is what the challenge is.
I think there's one, related to trust that is really interesting. What has really taken off and is stunning in terms of numbers are the services that enable you to put your deposits in banks far away from Germany, but still within the European Union, in places like Bulgaria, Portugal, Spain. Not from a German perspective necessarily the ones that you would see as more trustworthy than your German bank. And you've seen billions, literally, in savings going to these banks within a very, very short period of time. And there are a number of companies that are involved in there. One is WorldSparen, I think Raising is another one. And to me, that while I absolutely think trust is something that banks are benefiting from having a competitive advantage, but by someone putting their savings into a place that is far away from their German bank does mean that there's a real willingness to move that trust either for convenience or another value add, and rather trust sort of the institution of the European Union and them possibly bailing out these banks more than the 1 or 2% of opportunity cost that they would have by sticking to their deposit at 0%.
Okay. Thank you very much. All right, so to summarize this a little bit, to make a roundup, in my world, there are 3 steps of innovating a business model. It's digitizing, it's automating, and making the business intelligent. For me, as I hear what all you're saying and all your businesses are going, is the first step, like the digitizing the user experience and saving him time, saving the user some time, and in the same time not losing trust. And the next step, like you said, will be like automating and making services more intelligent. So basically, it's now, please correct me if I'm wrong, the time of front end, right? So the time of user experience, the time to show the user what is possible in the digital world. And the next steps, perhaps, will be to make those services he already accepted, make more efficient and so intelligent that he will be automized and more efficient on the way, in the way he uses the services already. And I'm really thrilled to see each one of you next year, perhaps, to see where all your business went. And thank you very, very much for being here, sharing your thoughts. And yeah, just give it a round of applause. Thank you, guys.